Srishant Challa, the managing director of the company, joins us on the show to talk to us about that. There was a bit of a negative news coming in, or a sentiment downtick coming in, because there was a breakdown of one of the key equipment in one of their plants, and that was expected to have an impact on the profitability as well. Srikant, let's just begin with that itself. Do you have insurance for this equipment which is broken down? What's the timeline of repair, and what kind of impact will it have on your bottom line?
So yes, this equipment, we do have 100% insurance coverage, and we also have coverage for the loss of profit. So there is no impact on an annualized basis for whatever projections, guidelines, or anything that we have given. This impact is only going to be mostly in this particular quarter. And this equipment also, there was a plant shutdown that was there, so nobody got hurt during that particular point in time. And during the service time, this accident had particularly taken place. And we've been speaking to the equipment suppliers as well. Typically, it takes about 3 months to get this equipment, but thanks to our relationship with them, we're expecting this to come by the end of next month itself. So hopefully, we should be up and running by then.
That there would be a bit of an impact in this quarter. What could be the impact on a quarter-on-quarter basis? Are we talking about a decline? What could be the impact on both top line and bottom line?
So mainly bottom line impact is about around 15 crores is what we are estimating at this point in time. But again, considering that even the loss of profit is covered, the overall impact is not going to be there on an annualized basis.
Also, Srishant, just want to understand by, next couple of months you're expecting it, but what would be the production hit also? And are you working on some other machines that are taking up and picking up the load for this one not working out? So what is that demand and any impact that could affect your production as well?
Well, right now we're in fact looking at buying from some third parties to actually cater to the existing orders that we have. So we've done this in the past. Even last year, we were buying a lot of coffee from third parties. So this month also, we are actually initiating talks to do something like that. Wherever possible, we are trying to postpone orders. Wherever not possible, we are executing the orders in this way. So as far as the customers are concerned, we are working with them closely to find a solution to move forward.
So right, Srishant, and also just in terms of overall, moving away from this, I want to also understand, you've spoken a lot about your Vietnam expansion. There are a lot of things that are already going on in terms of the projects there as well. So what is the progress in terms of these Vietnam strategies? How far and when will we start seeing the synergies? When will they be working in conditional form, the factories that you're looking at over there?
Yeah, so Vietnam, the first round of expansion is already done, where we have now expanded capacity from 13,500 to 30,000 tons. We'll be enhancing the capacity by an additional 6,000 tons by next year this time. So that project is also completely underway, and we are on track for completing it next year.
But just help me understand, you had earlier guided for what, 18 to 20% volume growth. Despite the snag that you have hit, would you be able to maintain that? And secondly, just wanted to, okay, so that's the clarity coming in, you'll be able to maintain that. And with respect to the coffee prices itself, we have seen a lot of volatility of late. Where do you think it is going to be stabilizing, and what would be the impact on margins?
So coffee prices per se do not impact our core business because we work at a cost plus model. So whatever the price is, it doesn't matter. We offer the price based on whatever's prevailing at that particular point in time. That said, there is going to be a correction going forward is what we feel. Whatever prices are there at this point in time also are not really sustainable. So we're looking at a correction coming maybe closer to January of next year.
Right. Also, just Srishant, in terms of the Capex plans that you have, could you give us some indication in terms of that as well? Because you've given a very aggressive Capex plan. So in terms of what is your cash flow outlook as well as return ratios, anything in terms of impact on that we could say?
Yeah, so the whatever we have already committed to with respect to the expansion plans, we are on track with the same. The Vietnam expansion, which has already been completed right now, was was in the range of about $30 million. What we are doing is we're installing a new freeze drying line, and that is about a $50 million investment, which will come online by next year. In India also, we are building a new facility that will come online by March of 2024. And for that also, there's about a $45 million investment that we are making.
These investments that you're making, there's not a worry on the balance sheet front, right? Because I think in between there was this worry about the balance sheet inflating quite a bit. What's your take on that?
Actually, there's no worry from our side because not only our sales are increasing at a pace of more than 20% year on year, we have a very good visibility for the next couple of years. Typically, in our line of business, we have confirmed orders in place between 1 to 3 years in advance. So we have customers giving us commitments up to 3 years in advance. In a very rare exceptional case, this time we have a customer giving us a commitment 5 years in advance as well. So that is a kind of visibility that we have, which also gives us that confidence that we need to go in for that expansion sooner rather than later. And that's what we're doing right now.
The worry that was there on the working capital bit, because if I have it right, in your Q1 earnings call, you had talked about how the working capital loans might increase a bit and there was going to be a pressure on the working capital cycle. You're saying that all of that gets negated because you've got some of the advances as well from the customer. Is that right?
Not really advances. The working capital reduction is going to be there because the green coffee prices are reducing. The market is on an inversion basis right now. So if you sell on a spot basis today, it's much more expensive than if a customer wants to buy next year. And most of our customers, they have very good planning. So if they want to buy 1 year in advance, they will automatically get a better rate from us as well. So whatever coffee that we're covering for next year, we know that it's going to be at a significantly lower price than what it is there today. So which means that the working capital also will be lesser for next year.
Point taken. So that helps us understand that. Thank you so much, Srishant, for putting into perspective your entire Capex plan, this key equipment, breaking down what could be the impact of that, and coffee prices as well. Appreciate you joining us.